Hi, I'm John Mayfield, the real estate tech guy with another Global Real Estate School podcast. Welcome to the podcast. This is John Mayfield, the real estate tech guy with episode 080. Well, I kind of feel like a broken record sometimes because there's a little bit of a lapse or time in between podcasts, and it's just been it's been a great 2019, but I've had a lot going on, and it's been a sad 2019 as well because I lost my mother this last month. So I apologize that I've not been regularly producing podcasts, but I think on a previous episode, many of you know that my wife and I sold our home and moved, and we had some challenges getting the office set up down in our basement area, but we're almost there. And then I've had a pretty grueling travel schedule, and then again, the loss of my mother just kind of set me back a little bit from doing regular podcasts. But I did want to do another podcast for those of you who subscribe and listen. Thank you so much. I appreciate the kind feedback and emails I receive, and also would appreciate a 5-star rating and any comments you can provide in the comment section on the podcast platform that you are listening to. So today, I wanted to talk about a reverse annuity mortgage. Yes, that's right, a RAM mortgage. We talk about this in Chapter 15 in my online real estate school at Global Real Estate School. And you need to know all of these different types of mortgages. You know, we have the growing equity, and we have the SAM mortgage, shared appreciation mortgage, and, you know, there's a fixed rate, adjustable rate. But today I want to talk about a reverse annuity mortgage. And specifically, I wanted to talk about a reverse annuity mortgage because I went on a listing this past week, and the sellers were telling me their mother, who had passed away, had a reverse annuity mortgage. And unfortunately, she had maxed out her reverse annuity mortgage, and so there was really no equity in the property, and she owed more than what I was going to be able to sell the property for, and it was just a really sad situation. And unfortunately, the children had no idea their mother had taken out this reverse annuity mortgage. And you see these on TV. I mean, I think Tom Selleck is one of the celebrities who promotes, I'm thinking Tom Selleck, but promotes the reverse annuity mortgages, and some other celebrities have as well. And they're good mortgages. I'm not throwing Tom Selleck or anyone under the bus who promotes the reverse annuity mortgages. They are good mortgages. However, they can put a senior in a situation where they might owe more against the property than what it's worth. And so the way a reverse annuity mortgage works is, if you're a seller, and let's say you're a senior, because normally they're 65 years or older, you're a senior, and you want to pull the equity out of your home, you can go and apply for a reverse annuity mortgage. They will do an appraisal. So let's just say your home is worth $100,000, okay, just for simplicity's sake. And you owe nothing on it. You're 65 or older, and you're saying to yourself, I just can't make it on the income that I'm receiving through Social Security or any other kind of retirement, and you just really would like to continue live in your home, continue a normal lifestyle. I'm not saying an extravagant lifestyle, but you just can't make it on your Social Security and your other pensions. And sometimes people may not have any kind of benefits like that. And so with a reverse annuity mortgage, the lender, if they appraise your home for $100,000, they may loan you up to $80,000. The problem is, and so you would get monthly payments. Instead of making a payment to the bank sends you a monthly check, and then that interest is going to add on to that balance and so forth and so on. But The problem I see with reverse annuity mortgages is that many lenders will loan more than what really the house is worth. And so in my situation, the lady was actually given notice that she was going to have to vacate her property. She'd used up all her equity, and her children didn't know about this. And unfortunately, she passed away, or fortunately, before she was asked to terminate or vacate the premises. So, it's a really sad, terrible situation. And unfortunately, reverse annuity mortgages can seem very attractive to seniors who maybe don't want to go to the bank, a local bank, or don't want to ask their children. And they see this on TV, they make a phone call, and the next thing you know, they are getting a monthly check, which is great. But at some point down the road, they're going to run out of equity in that house, and the bank's going to want monthly payments paid back to them. Or if you can't make those, they're going to start the eviction and foreclosure process. So remember, reverse annuity mortgage, you as the borrower borrow the equity out of your home. And you can usually have to be 65 years or older, and you can sometimes get yourself in some really bad situations. Now, I'm not saying reverse annuity mortgages are bad or wrong. I'm just saying we need to have conversations with our loved ones who might be senior adults and warn them of the dangers and pitfalls, but also make sure that you don't pull equity out that would put you in a situation where you couldn't sell your home for what it's worth. Hopefully that makes sense. So it's a very interesting type of mortgage. It's very popular today with seniors. There's a lot of advertising on TV, and it's something we need to be very, very cautious about. Well, I hope that you learned something about reverse annuity mortgages, but share it with someone that may have a loved one who's a senior, and make sure that they understand the pitfalls. There's benefits to a reverse annuity mortgage. My wife and I were talking about this situation, and there's two sides of the coin. Number one, it's like, how can our government let banks and lenders do this to seniors? And then the other side of the coin is, well, you know what? They paid that home off. They have equity in that home. And if they want to borrow their equity out of the home, that's great. Just remember at some point, the lender may require you to begin making payments back to them. Well, as always, thank you for listening to the podcast. We'd love for you to give us a 5-star review. We'd love for you to subscribe to the podcast. And don't forget, we've got a lot of great tools at globalrealestateschool.com. Thank you for listening to the podcast for Global Real Estate School. I'm John Mayfield, the Real Estate Tech Guy. Go out and make it a great day.